Good morning. Happy Sunday. Let me pull up this article here. I just wanted to read from this because this is basically everything that's going on in the headlines today. Um, there's an article. It's from Tyler Durden. It's called Date the Headline. Starts off today. We have three headlines of relevance. The first one comes from Business Week as of October 9. Finance chiefs warn currency war is risk to growth. Well, duh. Okay, in which we read, as the International Monetary Fund's annual meeting began in Washington, policymakers warned that efforts to boost exports by embracing weaker currencies threaten to provoke protectionism and trade imbalances at a time when economic growth is already slowing. China was again the target of criticism, as foreign officials called the yuan undervalued and pushed for its appreciation to be accelerated. So everybody else, we and Europe and these guys are trying to devalue currency, including Japan. Well, they're saying China should increase the value of their yuan, which I don't think that's going to go good. China doesn't need to blow out their currency to the upside for trade. Okay, this was promptly followed by the Telegraph article. IMF fails to strike deal over currency frictions, in which we learn part two of the weekend's key festivities. The International Monetary Fund on Saturday night failed to reach an agreement on tackling mounting global frictions over exchange rate policies, despite U.S. calls to deal with the issue more forcefully, which brings us to today's game of Date the Headline. It's kind of interesting. That's one of the reasons I love reading these guys' articles. They tie everything up and they go back and find from the headline from the New York Times, U.S. said to allow decline of dollar against the mark, in which we read a paraphrase of a quote by then Treasury Secretary James Baker III, together with some additional commentary. I think if you look at the underlying economic fundamentals in this country, they're very, very good. Whatever. This was, of course, in 1987. I'll just tell you what they're talking about here. But he added that the stock market appeared to be reacting to prospects of tax increases by Congress, the enactment of protectionism to reduce foreign imports, and to fears of rising interest rates and inflation. He also said that growth of computer-generated program trading of securities had contributed to the size of the daily sell-offs. At the time in 87, the market was selling off, pretty good. Well, now, of course, we got the Fed with complete control of the markets. So it's a little bit different there, but still a long enough timeline, the Fed loses the markets. I don't care what the situation is. So this headline came out in 1987. Oddly enough, it's basically the same headline as today. We all know what happened 24 hours later with the same set of conditions. The next day we had 1987's Black Monday, and the markets fell 25%. This article goes on. It goes on to read more of the article itself, and also at the bottom talks a little bit about the present foreclosure problem, the MERS, and all this garbage that they rammed, through and passed that bill Friday. Still don't know what Obama's done with it. Claimed to have vetoed it. Very sketchy there on whether he did or not. But this is a great article to take a look at, and with some good comments below it to see what we're looking at with these articles kind of tied in together. Anyway, I just wanted to pass that along to you on a Sunday morning here, and we'll talk to you later. Have a good day.